Hi, I'm Jim Gordon and you're watching Market 1 Minute. Joining us is Ken MacLeod, President and CEO of Sonoro Gold. Ken, welcome.
Thank you, Jim. It's a pleasure talking to you.
Great to have you here. Okay, tell us about the company's Cerro Caliche Gold Project.
The Cerro Caliche Gold Project is located in the northern part of Sonora State, Mexico, which is about an hour's drive from the American border, just south of Tucson, Arizona. And Sonora is one of the most prolific gold-bearing states in all of Mexico. And Mexico is number 8 in the world for gold production, and Sonora State produces 28% of that amount. And so this particular project is surrounded by 4 producing gold mines. And so, like I said, it's an excellent area to do business in, and from a permitting perspective, it's a natural for us to be in Sonora State. The area is very well known for gold mineralization, and in fact, one of our nearest neighbors is Agnico Eagle, which is now producing the Santa Gertrudis project. To date, we've outlined about 20% of the mineralization that we consider the project is capable of supporting, which translates into 420,000 ounces of gold mineralization, averaging just over 0.41 grams per ton of gold. Now that will enable us to have approximately 323,000 ounces of gold over the next 7 years, with the intention of increasing that as we continue with the drilling program. So going forward, our strategy is to use the cash flow from operations to drill, and within the next 3 years be materially increasing our gold resource and annual production. And I think that is quite achievable.
Sonoro Gold recently announced a preliminary economic assessment of Cerro Caliche, followed by more drilling to come. Now, can you speak in more detail about that?
Yes, certainly, Jim. The PEA is a key step towards Sonoro beginning to produce gold and cash flow, which we intend to use to explore, and if successful, increase the size of the project over the coming years. The PEA also gives the project a first phase of our planned mines development, an initial base case after-tax NPV, using a 5% discount, of course, of approximately $41.5 million US, which is about double our current market capitalization. Also, Jim, the drilling we just announced is in part relatively low-risk drilling around some exceptional holes that have, because they were not too close or they were relatively isolated from the pit shells that our consultants Micon had described. They were not included in the recent resource estimation, so we plan to drill around them, and we're very confident of making material additions to our gold resource. The second part of the program is more speculative, as we're exploration drilling to the south of our highest grade area, where some very prospective outcropping high-grade veins were exposed by road building recently, and it's quite extensive, so many opportunities to increase both the size of our resource and the grade are present in that area.
And how do the PEA and the drill program fit into the company's overall strategy?
Well, the PEA has demonstrated a potentially economically viable project. The life of mine currently is shown as around 7 years, and it contains 332,500 ounces of gold equivalent. And in the first 3 years, we expect it to average 56,500 ounces a year of gold production, which at today's prices is over $27 million annually. And the startup capital required for that is $32 million US, and provides us with a 2.2-year payback. Now, with 7 years of production, the all-in sustaining capital is in the order of $1,300 US, and the cash costs are $1,200 US. So what the PEA has demonstrated to us as well is that we have the ability to continue with the drilling program to increase the life of mine. And when we go beyond 7 years for the life of mine, the all-in sustaining capital and the all-in cash costs are diminished as well, because the amortization period for the capital costs will be spread over a much, much longer period. Now, going forward, we intend to commence a 10,000 meter drilling program in the next month, and that hopefully should be able to expand the resource. And in fact, we're looking at developing areas of higher grade that we've recently outlined with the surface sampling programs and the road building programs. So all in all, we fully intend to increase the life of mine with this next phase of drilling to beyond 7 years, and hopefully to somewhere in the vicinity of about 10 years. And then continue with the drilling program beyond that, with the expectation that over time, we should be able to increase the life of mine to over 14 years.
And finally, in your opinion, why should investors own shares of Sonoro Gold?
I think right now we have a market capitalization of approximately Canadian dollars $20 million. And as we go forward, as we develop this project, and strictly speaking from the point of view of a 7-year mine life, the expectation is that the net present value of the resource as it stands is $41.5 million US. That translates into over $50 million Canadian. So when you consider that we have a market capitalization of $20 million Canadian, and the value of the deposit as it stands today is sitting at over $50 million Canadian, then I think there's a tremendous amount of value to be gained from being a shareholder of Sonoro at this time.
Ken, thanks for joining us.
Thank you, Jim. It's a pleasure talking to you.
Hi, I'm Jim Gordon. Thanks for watching this Market 1 Minute on YouTube. If you want to keep up to date with other videos that we're putting out, you can click subscribe just below me or click on this list to see other great videos from Market 1. And thank you again for watching.